Kaya is the managing director of and 100% shareholder in Hopi Limited. Hopi Limited has no other employees. For the year ended 5th of April 2018, Hopi Limited's tax-adjusted trading profit after taking account of directors' remuneration and employers' Class 1 national insurance contribution is forecasted to be 80,000. Hopi Limited has already paid Kaya gross directors' remuneration of 30,000 and dividends of 45,000 in the tax year 17-18. Kaya does not have any other income. Based on these figures, the tax and NICs for Kaya
Okay.
and Hopi. Yeah.
So let's stop there. What do we have so far?
So Kaya owns the whole company. His salary is forecasted to be 80,000.
So,
and of the 80,000, he's already been paid 30,000, and also a dividend of 45,000.
Yeah. So
Salary
who's
of 30.
paid? Yeah. So salary of 30 and dividends of 45 from Hopi Limited, right?
Yeah.
And Hopi Limited's tax-adjusted trading profit is 80,000. After taking into account the 30,000 and the Class 1 NICs on the 30,000. Does that bit make sense?
After taking it out, yeah.
So that's after the 30,000, and then the 30,000 would have 13.8% Class 1 secondary contributions as well, which is an allowable deduction for the company. Dividends would be paid out of distributable reserves. So dividends will be paid after the corporation tax has been paid on the 80,000. Okay.
Yeah.
And no other income. So continue, please.
Based on these figures, the tax and NICs of Kaya and Hopi Limited for the year ended 5th April 2018 will be, so Kaya has income tax of 14,200 and employee Class 1 NICs of 2,620. Hopi has employer Class 1 NICs of 3,013 and corporation tax of 15,200. However,
okay, so just a quick, okay, yeah, continue please, sorry.
However, on 31st of March 18, Kaya is planning to pay herself a bonus of 25,000, but is unsure whether to take this as additional director's remuneration. The gross remuneration will be 25,000, or as an additional dividend.
Okay, so what are your thoughts now, please?
So I think the question is about checking if the extra 25,000 needs to be taken as salary or as a dividend. So do two calculations.
Two calculations again. Now, we'll come to that shortly, but I just want to discuss the calculations. So we have, so my question to you is, if he or she, herself, okay.
Yeah.
She will pay a bonus of 25,000. So remuneration, 25,000. My question to you is, how will it affect income tax, first of all, please? Her personal income tax?
It will increase.
Okay, why? Because it'll be additional employment income, right?
Yeah.
Non-savings income.
Yeah.
Good. And the personal allowance has already been used up with the 30,000. So it'll all be at 40%, according to my figures. 30 plus 45 takes it into higher rate.
Yeah.
Therefore, the whole 25,000 will be at 40%. How would it affect employee Class 1 NIC?
1 second. Let me just get the formula. So employee Class 1, it will be 2% of anything, or 2% added on more.
Will it be 2%? Have you got the tables in front of you?
Yeah, I do. Yeah.
So for employees Class 1 NICs, there should be a 50,000 figure somewhere.
Yeah, so above 50,001,
Yeah, it's 2%.
It's 2%.
So her remuneration at the moment is only 30,000.
Okay, yeah, you don't.
Yes.
Yeah, I was taking into account 45. Okay, yeah, so 30,000. So some of it will be 20,000 of it will be at 12%, and then the rest will be at 2%.
Excellent. So that's what I was looking for. That's what you'll do in your computation.
Yeah.
Excellent. And yeah, keep in mind dividends are not
Mm.
relevant at all for income tax, as in for NIC purposes. Hopi Limited, similar sort of issue. If you're paying an additional 25,000 remuneration, you're paying an additional 13.8%. There's no higher rate band or upper threshold for secondary contributions, as you would see. So it will just be at 25,000 at 13.8%, which will increase the Class 1 NIC, which will effectively increase the expenses in the company. So the company expenses would increase by the 13.8% as well as the 25,000 salary, therefore reducing corporation tax liability. Agreed?
Yeah. Yep, agreed.
So keep that
So
one in mind.
Yeah. So would that be so that figure plus the 25,000 times by 19%, and that's what I'll
Sorry?
deduct.
Which figure?
The revised NIC figure.
Yep.
Plus the 25,000 bonus.
Yep.
Times by 19%, and that's what you deduct.
Exactly. So that's your tax saving. Yeah, that's your deduction from corporation tax.
Okay.
I'm just going to double check something. I'm just checking. 80,000 times 19% is 15,200. So this is your starting figure. 80,000 at 19% is 15,200.
Okay.
So yes, you do 80,000 less 25 less your 13.8%.
Yeah.
And then that at 19% would be your corporation tax liability.
Okay.
As you can see, paying a bonus, there's increase in personal tax liabilities, but there's savings for corporation tax purposes. As an additional dividend, what are your thoughts, please, for income tax to begin with?
For the 25,000.
25,000 dividend.
So she's already had a dividend during the year, so the nil rate band's gone. Everything will be a higher rate, so
32.5.
Yeah, 32.5.
Good.
Additional
Employees
income.
Class 1 NICs?
Employees Class 1 NIC isn't doesn't affect dividends.
Excellent. Good. So both Class 1 NICs for both employee and employer are exempt from, well, as in not relevant at all outside the scope for dividends. So that's one advantage or another advantage of dividends compared to salary or bonus. Why? Because bonus would be taxable at 40%, right? We said. Plus the additional 12 and 2%, plus the additional employers' NICs at 13.8%. But dividend would be lower, so not 40%, it'd be 32.5%, and there'll be no NIC implications. And also corporation tax, it will remain unchanged. Why?
Is this fixed at all?
Sorry?
Sorry, what was the question? Corporation tax?
So if you take out an additional dividend of 25,000, corporation tax will remain unchanged. Why?
Because that income's already been taxed before at corporation tax.
Exactly. So dividends are taken out after corporation tax. Exactly. So effectively, in terms of computation, it's just basic, but it's important to understand fully the fact that the difference between a bonus and dividend in the company accounts, which is key. So you have sales, less cost of sales gives you gross profit. Straightforward. If you take out a salary, Then you'll have less expenses, and within the expenses would be salary and class 1 NICs,
Yeah.
which will give you your profit.
Mhm.
That profit you'll pay
Taxed.
19% tax on that profit.
Mhm.
Uh,
And then that figure
that's
is what you then distribute as dividends.
exactly. So
Mhm.
so effectively, technically, if you're looking at debits and credits, you'll have a credit. So effectively you'll have credit gross profit. You'll debit your expenses, gives you net profit, which will be in credit,
Yeah.
okay, because it's a profit. Then you'll debit corporation tax,
Yeah.
which will leave you with a further profit figure. So profit
Yeah.
after tax. Profit after tax is credit. Now, technically, what happens, this is the
Distribution to
background
members.
sort of thing. So, sorry, yep.
You move that all to distribution to members,
Yeah.
and then
How do we do that? What's the double entry?
it's credit your P&L profit after tax, and then debit distribution to members.
No, it's the other way around. Because profit after tax is already in credit. So to take it out of the profit after tax account, you debit profit after tax and you credit retained earnings.
Mm-hmm.
Distribution to members, where did you get that terminology from?
Also, I think that's a code that we use at work. So
Okay, exactly. Yeah, so it's
it's
fine.
the
I
same
understand what
code,
you're.
I think. Yeah.
Yeah. We're talking about the same thing. So, but I thought this you've got it from somewhere because it's not usually used when they're teaching.
Okay.
But it's fine. I definitely understand what you're saying. Each
Yeah.
company will have their own sort of terminology. But yeah, I'll use the term retained earnings. So you'll debit P&L,
Mm-hmm.
credit retained earnings, which is on the balance sheet now.
Mm-hmm.
Then you take out dividends.
Yeah.
So then you debit dividends from the retained earnings account.
Yeah.
Okay. So do you see how it's not affecting your 80,000 in this example?
Yeah.
Any questions?
Nope.
So it does say you are expected to calculate the revised income tax liability and NICs for Kaya and the revised corporation tax liability and NICs for Hopi Limited under each option for 10 marks. So let me give you 13 minutes.
Yeah.
Produce a computation clearly showing the differences in the tax liabilities, and all four of these need to be considered and make a point. So if corporation tax is remaining the same, just explain why it's remaining the same.
Okay. Yeah, thanks.
Okay, so under for income tax purposes, you have mentioned 14,200 was the original. Is that the original?
Yeah.
Yep. So then you've added 10,000 to the tax liability, gives you 24,200. No, I think you have to do the whole computation. You have to do the whole computation because, shall I tell you why? Because originally we have 30,000 remuneration, 45,000 dividends. Okay. Now, part of that 30,000 would be covered by the personal allowance. So 17,500 would be at 20%. Agreed? Added 30,000 less 12,500.
Okay, yeah.
So 17,500 would be at 20%. Now you would use this additional 25,000 as taking up the basic rate band at 20%.
Oh, I see what I mean. Okay.
And then the dividend
And then
income
the
will
dividend
push.
income as well.
Yeah, and then the dividend income will fully be at 32.5%, probably.
Okay.
Okay.
Okay. Yeah, I'll do that now. Yeah.
Okay. Employees class 1 NICs. you'll have 50,000 is available. So, but we've got 55,000. So, yeah, that would be fine. Employees NIC would be fine. And for Hopi Limited,
I said this stayed the same, the calculation for corporation tax.
if there's dividends or what?
Yeah,
If there's
dividends. Yeah.
so where's your calculation for corporation tax for the salary for the bonus?
Oh.
Okay, so I don't think you've done that one as well.
Yeah.
So so effectively there needs to be 4 computations. So you
Okay.
do so
Okay. So
for
two
example,
for Hopi, and then 1 income tax and 1 NIC. Is that correct?
no, 2 income tax, because one will have the additional dividend. So one will have the additional bonus. So effectively 4. So income tax still be 2,
Yeah.
meaning 1 for the additional bonus, which will,
Yeah.
as I said, which will push the dividends into high rate. And then another one will be for dividends. So let me just, I'm just going to request control.
Okay.
So for example, you have NSI, DI. So this is additional, and presentation is quite important as well. So you explain clearly what the computation is looking at. So we're looking at the additional bonus of 25,000. So therefore, employment income becomes 30,000 plus 25,000. Which gives us 55,000. And dividends will stay at, was it 45,000?
Yeah, 45.
Does that make sense? So now you can
Yeah,
already
that makes
see that
sense.
your computation will be completely different.
Yeah.
And then you'd have here, for example, additional dividend. And you'll do the exact same thing, NSI,
Okay.
DI, but then this
You
will
do
still be at
30,000 here,
yeah,
and then you do 45 plus 25, so
excellent,
70 there.
exactly.
Okay.
So should I leave it to you?
Yeah, makes sense.
Remember, the personal allowance always goes against NSI.
Yeah.
So that's additional bonus, additional dividend.
Yeah.
That's giving you marks for the income tax, and then you'll do the whole liability again at the bottom.
Yeah.
Employees class 1, you only need 1. Why? Because it's only affecting the bonus. And then you'll make comment, as I told you, if something's going unchanged, you'll make comment. You'll say dividends do not affect NICs.
Okay.
So effectively, there's 2. There's 1 and 2. And then for employers class 1, this is 1. And then you'll have the other one, which is the additional bonus, 25,000, which will affect employers class 1 NIC, and it'll affect this whole computation. So you'll have 2 computations of this as well.
Okay.
Now this,
I think that should have gone down there. Yeah,
I see what you've done. I see what
Yeah.
you've done now. So you've put it here. Okay, so that is personal tax. So it comes back to here.
Yeah.
The individual.
Okay, yeah, I'll redo that.
These questions are very good. The reason being is because this is like the backbone of tax.
Yeah.
And many students, they still don't understand, as in it is complicated. Trying to get your head around companies being different, and then this moving on to your personal tax return, and then NSI, DI, tax liabilities, NICs, which also come in the middle. So this is good practice to give you the backbone, and that's why I've chosen 2 similar questions. Even the first question, we were simply looking at differences between personal liability and company liability.
Company, yeah.
So once you get your head around this, then it'll become second nature. I'll let you know that at CTA level, which is the highest level of tax qualification,
Yeah.
they still ask questions that are obviously not as straightforward, but related to this whole concept. To be honest, is probably similar as well in some ways. Obviously, there's a lot more, but it comes back to the same concept, which is company and individual is separate. Companies have corporation tax, individuals have personal tax, but then they all connected somehow, somewhere. And then you have NICs, as I say, all is in somewhere there as well.
Okay.
So I'll give you a few more minutes now.
Okay. Yeah.
And show 4 computations, please.
Okay.
Yeah. So, and then dividends do not affect NICs. Again, you'd get half a mark there. The rest of the computation, you'd be picking up half marks everywhere and anywhere. So you'll get half mark for personal allowances, 37,500 at 20%, 40%, 0%. You'll all get half marks everywhere. And then you'll get a full mark for the revised corporation tax liability, 9795. And the revised class 1 NIC would give you 1 mark as well. Okay. Any questions?
Nope.